Welcome back. Take a look at the gold prices first of all, and we have seen some strength there, and that is because the uncertainty about the US and China trade talks is back, and we have seen some safe haven buying come back in case of gold. In the previous week, we had seen the gold prices decline up to almost $1,450 per ounce. But from there, holding around $1,470 tells you that $25 is back on the back of uncertainty, some decline in US dollar, and the kind of data that we have seen come in. And add to that, the reports from IMF, WTO, OECD, all revising the economic growth on the weaker side for this year and much of next year as well, seems to be supporting gold on your screens right now. So 1476 is where we're holding in the trades right now. But the important point also is that what is the kind of demand that we are looking at in sense of gold, even as there have been uncertain period. We haven't seen gold actually make too much of a run up as was expected in the initial times. Alistair Hewitt is head of market intelligence at World Gold Council, and he joins us on the show now. Alistair, hi, good to have you. What has been your sense on the buying patterns, demand, physical buying, etc. in the global markets? Are people buying gold, especially given the fact that 2019 has been a very, very uncertain year?
So when we look at 2019 as a whole, we've seen some really big thematic trends emerging in buying patterns. I suppose the first one to highlight is central bank demand. Central bank demand last year was incredibly strong, and we're looking at another very, very strong year, potentially a new record high being set. We've seen the core central banks, Russia, Turkey, China, continue to buy throughout the year, but we've also seen new central banks adding gold to their reserves, most recently Serbia. So that's one big theme over the course of the 2019. The other one's huge inflows into gold-backed exchange-traded funds. And when we had the last big run-up in the gold price back in 2012, it was mostly US domiciled funds that saw the significant inflows. 2019, we've seen more diversity, a more balanced inflow. So we've seen significant inflows in the US, but also in Europe. And European assets under management have hit a record high. So those are probably two of the biggest themes that we've seen in 2019 when we think about gold flows.
Alistair, World Gold Council came out with a very interesting report on retail sales recently. What really has been the reading when it comes, especially for India? Where does gold stand in the list, in the ranking when it comes to an investment demand? And also, how have you seen millennials, Gen Z react to buying gold as a portfolio?
So we've surveyed 18,000 people worldwide in India, China, Russia, Germany, the US and Canada. And we really just want to understand, how do people think about gold? How does it play a role in their portfolio? And the insights have been fascinating. So really encouragingly, gold is well bought by lots of people around the world. It's the third most consistently bought retail investment product, and it's the third most consistently bought jewellery or piece of jewellery. So people around the world have a strong affinity for it, and it's being bought. When you think about the generational differences, there are some big challenges, probably most notably in China, where you think about Gen Z, jewellery buyers, and there's a big attitudinal disconnect between the older generation and the younger generation. And people in the industry are aware of that, and probably why we're seeing such a huge degree of product innovation. The other really big theme that comes out globally is the market can grow. Of the people we surveyed, 38% had never bought gold in the past, but were warm to the idea of buying gold in the future. We probed a bit more deeply to understand why they hadn't bought in the past, and trust came out as one of the most significant barriers. So people are interested in gold, they want to buy, but there's a trust hurdle around purity, around fake or counterfeit gold, and around whether or not people trust the retailers. Now, I know there are plenty of well-trusted organisations in the industry, and if the industry can get together, if they can promote trust and build trust, then that's an opportunity to grow the market.
The other interesting thing really has been about the overall global price movement that we've seen, Alistair. What have seen in that? While we did see all-time highs in the Indian markets and perhaps 70 other currencies when it comes to the gold prices in this year, we haven't been able to hold around those levels. How do you look at the overall global setup or scenario right now, and the impact of gold that you have seen from that?
So in terms of the run-up in the gold price, there have probably been two aspects to it. The most important one's the reduction in US Fed rates. We saw At the start of the year, people anticipating there being rate rises in 2019, but by the time we got to the mid-year point, people were pricing in rate cuts, and we've seen that, and gold benefited off the back of it. But it's not just US rates. Global monetary policy is at its loosest since 2009, and that's a supportive environment for gold. And then, of course, you've got the ongoing uncertainty, the trade tensions with US and China, and that's supported the run-up. And when the markets heard that there'd been some sort of negotiation, some sort of progress, risk assets rallied, so people flowed into equities, and safe haven assets gave back some of the gains they'd made this year. When we speak to investors, I think the more strategic long-term investors are more likely to be a bit cautious in their view, and is why we've seen strong central bank demand and why we've seen strong ETF inflows this year. Your question around the impact of the price, it has had a very real impact on consumer demand in some of the major gold markets. So in India and in China, the two largest markets in the world, consumers have shied back because of the sharp run-up in the gold price. I think what we're looking to see is to see how consumers respond over the coming months with the elevated price. Are people entering the market when there's a price dip? And that will give us a really good indication as to the health of the large consumer markets.
Okay. Alistair, one quick final question. So what is your sense going forward? Are we looking at more demand moving in here, especially given the uncertain scenario, which is expected to continue into 2020 as well?
So when we speak to investors, they talk about some of the big issues affecting their flows and the gold demand that have come through. And it's the change in opportunity cost, the lower interest rates, not just in the US but globally. It's the uncertainty, the US-China trade war, but it's not just that. You've also got Brexit negotiations. In Germany, you've got a large stock of negative yielding assets. Now, whilst there may be ebbs and flows, and you may get some positive news coming out every now and again, many of these issues aren't going to be fading away anytime soon, and that's going to continue to support inflows into gold, and that should continue to support the gold price. So where we are at the moment, I think we'll probably see a bit of this momentum continuing, especially with regard to central bank buying. So I think we'll probably be seeing a bit more of the same as we head into 2020.
All right, Alistair, with that, we'll let you go. Thank you so much for joining us and making sense of what's happening in the international markets and, of course, its impact on gold, the buying patterns, etc., and the expectation that we might see some more bullishness continuing into the next year as well, as far as the precious metal prices are concerned. Also joining us on the show now is Preetham Kumar Patnaik of Reliance Commodities. Preetham, hi, good to have you. What is your own sense on the precious metal prices? We've seen some strength come back, 38,200 or thereabout is holding. Are you buying at these levels?
So I like our contract, which is a mirror contract of the international price. I'm going to mirror Alistair's view too. So that primarily, as we look at it, despite the equity markets rallying to a large extent in the last 2-3 weeks, we did see gold hold on to its prices, didn't correct significantly the way we expected. That's primarily because the market is factoring the factors that the US-China trade deal is not going to be an easy seal. And yesterday's development of the US Senate passing a legislation supporting the protesters in Hong Kong doesn't say well for further deal negotiation. So already a complex deal is going to get more complex. And also, like you said, the loose monetary policy, which is existing in the global markets today, is going to support the gold prices. And in the near term, clearly, because of the trade developments recently, I think the gold prices are going to be firm for the next 2-3 days. Although a major development will be basically everybody's going to watch the US Fed's last policy meeting for this year, and the way they're going to take cues onto it. If the statements of the chairman were to be read in the last 2-3 days, it seems that he's going to maintain saying that they don't think there's any more need for interest rate cuts going forward. So that could play a little bit spoiler for the gold price. But that's separate. Because of the trade issues, I think the gold prices are going to continue to be interesting. So we are going to buy on dips towards 38,000 and 38,050 with a stop loss at 37,850 and a target of 38,400.
Moving on to crude oil prices, and while we did see 4,200 almost, we've seen very sharp profit taking from there. It has been about the Russian statement, also the US inventory is expected to rise. But from these levels, what is your sense?
So I think, Manish, you're absolutely right. I think there is simply no demand which is being generated, and the supply doesn't seem to be stemming off at all. Be it the Russians who are unlikely to cut any more further production, or the growing supply from Brazil, Guyana, and Norway. All this is actually adding up to the inventory we've seen also in US. So I think until unless there is a clear direction which is achieved on the US-China trade deal, which unfortunately doesn't seem to be happening in the next week or so, I think we'll continue to sell on rise. So our call is to sell at around 4,000 and 4,010 levels with a stop loss at 4,070 levels and a target price of 3,880.
All right. So the kind of scenario that we are in right now, it's a buy on gold, but sell on the core commodities like crude